Good morning, all. Thank you for being here. Happy to be here again this year. Thank you, JP. Thank you, Luma, all the renewable team, and happy to have some interesting discussions today. So I'm from S&P Global Commodity Insights. I'm in particular from the energy transition, sustainability and services. I'm from the research side of our company. And my background, many of you know me, my background is really on power analysis, but more recently my focus has shifted into energy transition. So I'll be speaking today about the changing forces when it comes to the PPA market, but also more broadly around the clean energy procurement markets and renewable energy markets. And it's an interesting time. There are multiple forces that are transforming the market. We have, we're seeing, I wrote here changing behavior, buyer behavior, but actually it's rather a changing focus from the buying side. We are seeing that the direction of travel is towards higher quality and greater granularity, but there is policy uncertainty. And this is overall slowing the momentum in sustainability and changing a bit the focus of the buyers. Then we have another important theme is the evolving conditions when it comes to the power markets. We are seeing that the volatility is increasing, the zero and negative prices are increasing, the curtailments are increasing. So we're seeing challenging conditions in the power markets. And then the third theme that is shaping the market is really the rise of AI and the data centers. The data centers and tech companies are driving pretty much the procurement, are reshaping the market. But other than that, the electrification theme is a little bit slowing. We're a little bit more skeptical. We're seeing more and more skepticism around the electrification story. We'll talk about, we'll start with the sustainability story. And just to mention that right now it's a busy time ahead of COP30 in Brazil. And it's a busy time also because there are the NDC submissions, but it's notable that the EU has not submitted an NDC this year yet. And so that shows the type of debates that are taking place in Europe. And it's also kind of showing that we are at an inflection point when it comes to sustainability commitments. On the private sector, we are seeing that the new sign-ups for key initiatives like the RE100 is clearly slowing down. We are seeing also that the actions within SBTi are slowing down. We have seen also the Net Zero Banking Alliance losing momentum. So there are clearly some challenges that are becoming more and more visible. And we see that the ambitions are being toned down, are moderated. And again, the challenges becoming more visible. So with that in mind, also the power markets evolution is also a very important driver here. Because first of all, the power sector story in Europe is a success story when it comes to decarbonization. We heard also from JP earlier. And this chart here shows that there's been a clear trend towards decarbonization in the power sector. We are, in terms of renewable share, hydro renewable share, we are above 50% across the broader Europe. High hydro levels have been helping as well over the last year and a little bit this year. And actually, when we count nuclear as well, we are over 75% of the power mix is decarbonized. So that's a great story to tell, right, for Europe. But this has come with challenges as well, because that has meant an increasing number of zero and negative prices. We have seen falling capture ratios. for solar in particular, but wind as well, and greater price volatility. And so what it means is harder to price renewables right now, and it's harder to forecast and manage risks. So this is creating some big challenges when it comes in particular to the PPA market. In fact, we see here in this slide the deteriorating capture ratios for solar in particular. I picked Germany and Spain. Particularly Spain is the largest PPA market in Europe. You see some very clear signs of deterioration over the past year. The trend is downward. And what's interesting also here to note is also the increased price volatility. In the chart on the right, I put the price spreads, the 4 hours price spread, which is effectively the difference between the top most expensive hours during the day and the top the bottom least expensive hours during the day. And you see that that spread is widening, right? And this summer it's been, those spreads have been wider than last year, and this is a visible trend over the past few years. So greater price volatility, which creates more complexities, but we'll see also some opportunities. When it comes to the PPA market, so the PPA market is reflecting in Europe these forces, right? We talked about the sustainability slowdown. We saw the power markets conditions deteriorating. And so the numbers in terms of the PPA market are not looking that great this year like in previous years. You see that in previous years we saw a steady growth in the PPA volumes, but so far this year, up to the end of September, for the 3 quarters, we're down 17% year on year in terms of contracted capacity. You see here the country details. You see that Spain is still seeing some activity and is still dominating pretty much the market. But you see some very significant slowing in key markets like Germany, in the Nordics, for the reason that I mentioned earlier: high price volatility, curtailments, and uncertainties around pricing the PPAs. It's also interesting to see other metrics around the PPA market, because it's not only about the volumes. And also back to what JP was saying earlier, I mean, there are still some interesting developments in the PPA market. The chart on the right in particular shows the size of the deals, which is also decreasing. You see in the orange bar. So we are pretty much below 50 megawatt in terms of average size of the contracts, which is interesting. The declining trend is interesting because it shows on the one end that smaller players are coming to the market, but then the other side, a little bit more on the negative side, is that it does show that the buyers are becoming more cautious, right? So back to the point, so it's the slowing sustainability momentum, it's the pricing conditions, these are all playing a role. Buyers are more cautious when it comes to commit to these long-term contracts. I show here the prices for PPAs. This is actually the data that come from my colleagues in the MRTS and pricing team. We have here Gabriel. And you see that the year for solar in particular, for the 10-year pay as produced PPAs, the market-based price index that my colleagues release every day, these price index are reflecting these deteriorating conditions, in particular when it comes to the capture ratios. And for the case of Spain, we are looking at even sub 30 euros per megawatt hour for a 10-year PPA. And for Germany, we're above that, but you see the dots in particular are the price herds in the market. This is some of the transactions that I heard by my colleagues. And you see the large spreads among those data points, which show diverging expectations here between buyers on the one side and sellers on the other side. So a lot of uncertainty around how to price these contracts and diverging expectations. And also take a look at the range that I showed there, which is essentially is what is the modeled number. That's a cost-based PPA price range, reflecting also some assumptions on the capacity factors. And you see that that range is well above the market-based indices, showing that, you know, it's a challenging time for developers looking to get projects off the ground and looking for financing. The market-based indices, the market prices effectively are well below what they should be for projects to make money. And so that's not a great picture for standing alone and intermittent generation. So the focus is also changing in the PPA market, and the focus is increasingly on flexibility and hybrid solutions. That's something we've been saying for a while now, for at least a couple of years, I would say. The numbers slowly are moving that direction. You see in 2025, you see that the multi-tech in particular is kind of coming up, 24 as well, right? And that's, those are combinations of wind and solar, combination of solar plus BESS. And also you see the top there, the top color, which is the agreements around the storage solutions and BESS in particular, which is something that we're following closely, and we're seeing more and more agreements. It's an interesting phase for those agreements as well, because for the BESS market in Europe, because the market is still brainstorming in terms of what should be the solution there, and what should be the agreements that should be happening, right? And at the moment, we are tracking a lot of merchant optimization contracts, but we see also quite a lot of tolling agreements. But again, the market is brainstorming there in terms of what's the best solution in terms of business model for BESS. It's something that we're watching very closely, and it's interesting this from the standpoint of looking at BESS from a standalone standpoint, but also co-located BESS is also something we are looking closely, and something that the market is looking closely. But a lot of complexity there, there's no doubt. That's why the numbers are coming up as only slowly, because the market is really trying to figure out and is really brainstorming what should be done. So the focus is on the PPAs, and the focus is on innovation and flexibility in the PPA market. The chart on the left shows the overall size of the PPA market right now in Europe. We are in the order of 200 terawatt hours per year in terms of energy delivered. And these numbers are interesting to show, because we typically focus on the gigawatt, and maybe the gigawatt doesn't tell the full story. The energy delivered is a good story to tell, right? So you see that the market is dominated still by corporates. The pie chart is an interesting one here, because it shows the role of the different sectors, off-taker sectors in the corporate market specifically, and see what's popping up there. I put there the number 24%, almost a quarter, is data centers, the technology sector. It's right now the largest off-taker sector in the corporate PPA market by energy delivered. So that's a new development, and again, it goes back to the point I was making earlier, that, you know, the role of data centers is very important in reshaping this procurement market. But also it's important to take a look at the certificate market, right? The unbundled market is still the backbone of the renewable energy market in Europe, right? So the chart on the right shows the size of the EU GO market and UK REGO market in terms of cancellation. I plotted here hydro, wind, and solar only. So for the EU GO, we're above 700 terawatt hours. And again, compared to the PPA market, it's a much larger market. So the unbundled certificate is very important. Demand for certificates has been also there a little bit slower in terms of growth. It's barely growing this year in 2025. We're putting barely a 1% growth, and in fact that is impacting prices as well. Prices have fallen substantially, also as a result of windy conditions in the last month, recovering hydro levels. So from a price standpoint, the certificate market is not that great, the picture, but it's an important market. And you see in the case of the UK REGO, the market is still struggling to recover the losses from the exit from AIB. I plotted there the cancellation, including also the EU geo imports, and you see that as of 25, we are not even back to the levels of cancellation that we had a few years ago during when geos were imported in the UK. So there have been demand losses, there's been demand destruction as a result of the high prices in the UK REGO. But the geo market, the guarantee of origin market, is an important market and is there to stay, and has an important role to play in highly decarbonizing markets. And in particular, innovation should be is something in the direction of travel, also in the certificate market, in particular around the granularity, the location, the time, and in particular with 24/7 rising, the certificate markets have a role to play, in particular with flexibility, being more flexible effectively than a PPA. So we talked about the role of the data centers. This brings me to the electrification story, right? So right now, the data centers have procured about 30 terawatt hours of clean power across Europe. And you see that the data centers will account for the largest sector in terms of growth through 2030, based on our forecast. So with 30 terawatt hours already procured, the data centers have to procure at least easily another 70 terawatt hours per year through the end of 2030. So it will be a big growth factor for the PPA market, the certificate market, and the procurement market in Europe. But other than data centers, other than this push on the power demand from the AI, the other sectors are not doing that great. So the electrolyzers are kind of very slow to take off. Energy intensive industry, other industrial sectors have been prioritizing other cost issues under pressure, under the changing trade and tariffs consideration. So what I'm saying here is that the procurement market in Europe is seeing some diverging forces, in particular when it comes to the willingness to pay, right? So we have data centers on the one hand that are going very strong in terms of volumes, and they're willing to pay. But then let's not forget that there is another part of the market, another segment of the market, where the willingness to pay is a big concern, and this concern around willingness to pay is going to reshape also the market in the future. So with that, I'm going to conclude the presentation with, again, just reminding that we have seen we're seeing a lot of uncertainty on the sustainability side. I'm looking forward to the panel with Kilian later, which will discuss the Scope 2 protocol guidance update, which is entering a key phase. This is clearly impacting the behaviors of the buyers, but the behavior focus has been shifting also as a result of evolving conditions in the power market, right? We talked about surging low and negative prices, falling capture ratios, increased price volatility, increased risk. It's more complex to manage risks. And so as a result, the PPA market is evolving. Okay, we saw the market is shrinking in terms of volumes, but effectively the market is going through a transition, right? The market is trying to figure out new products, new ways to manage risk and complexity. And we saw that the AI and data centers in particular are also in particular driving, will continue to drive this process, but we are seeing that the market is being reshaped also by the different willingness to pay of different sectors. And that's something that will continue for a while. All right, with that, I'm going to thank you and looking forward to the discussion during the day and for very interesting panels. Thank you so much.